Good morning and welcome to this webinar on Modernising African Payment Systems from African Banker in partnership with StoneX. I'm David Thomas, the editor of African Business Magazine, and I'll be moderating today's important discussion. Africa's trading relationships are evolving. Boosting intra-African trade will provide the greatest potential for building sustainable development and is a key goal of policymakers across the continent. The launch of the African Continental Free Trade Area this year means that countries are better prepared than ever to trade with each other. However, completing payments across Africa's borders can often be a complicated and expensive task. Today, many transactions still have to be settled in dollars or euros, requiring authorization from a central bank, extensive paperwork, and transit through a third bank in the US or Europe. Fortunately, new partnerships from both Pan-African and multinational companies are emerging in order to modernize African payment systems and facilitate intra-African trade. Research from SWIFT in 2018 showed almost 20% of all cross-border commercial payments sent by African banks remained within the continent, up from 16.7% in 2013. Intra-African clearing of payments increased from 10.2% in 2013 to 12.3% in 2017. Today's panel of industry experts will discuss the critical infrastructure and technology-led solutions needed to develop and implement robust payment systems that can spur and enable intra-African trade. There'll be time after discussion for questions, so if you'd like to interact with the panel, please add your question to the comment box and we'll get to a discussion after the broader discussion. So without further ado, let's introduce today's guests. First, we have Mike Obalou, who's the CEO of the Pan-African Payment Settlement System at the African Export-Import Bank. Good morning, Mike.
Good morning.
Next, we have Beatrice Pechtel, who is Head of Correspondent Banking for Europe, the Middle East and Africa at StoneX Financial Limited. Morning, Beatrice.
Good morning, David.
We also have David Unsdorfer, Senior Vice President at StoneX Technology Services for Europe, the Middle East and Africa and the Asia Pacific region. Hi, David.
Hi, good morning.
And we have Dennis Kruger, who's Senior Account Manager for Sub-Saharan Africa at SWIFT. Hi, Dennis.
Good morning.
So for the first question, I'm going to come to you, Mike. As I mentioned in the introduction, today key hurdles still persist when we talk about cross-border payments on the African continent. However, the Pan-African Payment Settlement System is trying to solve some of these. Could you explain how and why there's the need for such a settlement system?
Yeah, thank you very much. Again, we have a view of trade on the continent. We think that today African countries trade more with the rest of the world than they trade with themselves. And some of that is because of inefficiencies that exist in payments. There are a number of hurdles that exist with creating trust, building the kinds of logistics infrastructure that will enable trade on the continent. We have taken payments and we understand that payment is it's the tool that enables trade to happen between parties. And if payment becomes more efficient, then trade among African countries become more efficient. So what we've done is we've come up with a number of design principles. And we've said, for example, that first of all, any payment infrastructure for the continent will have to be founded on a sound legal basis. We'll have to be able to support payments in local currencies. We'll have to be able to support instant payments and must be backed by an entity that's able to provide some support to ensure that settlement finality does take place. So what we've done as PAPS is we, in partnership with the central banks, we understand that payments lies squarely within the remit of the central banks. We've put together a financial market infrastructure that is able to connect to all of the central banks and payment service providers on the continent that will allow transactions to originate in local currencies and to be settled or to arrive at the destination in local currencies. Some of the big challenges that we have today with payments is, access to FX. And so by design, we have designed PAPS to be able to allow businesses, governments, individuals, and so on to be able to originate transactions and conclude them in their domestic currencies. So a merchant who is in Ghana and is selling to a trader in Nigeria is able to receive his payments in Ghanaian cedis, while the buyer is able to actually make payments in Nigerian naira. Okay, and so PAPS sits in the middle and facilitates those payments. By so doing, we believe that we will be able to drastically reduce the cost of doing those transactions. By the time you make payments instant, what that means is that people are able to increase the frequency of their trade, and the confidence of the parties will certainly begin to rise, and it will encourage more trade between the counterparties. So PAPS, today we've started our pilots in the West African region, in the WAMSI countries, having successfully connected all the central banks. And we are set to actually scale our rollout across the continent.
Sure. Well, thanks very much, Mike. That's a great introduction to the work of the settlement system. Turning to you, Beatrice. Obviously, Mike's just hinted about some of the issues there, some of the ingrained problems with cross-border payments. You know, the issues around cost, speed, and compliance. From your point of view, what must be done to truly modernize payment systems across Africa? And if you could come off mute, please, Beatrice. Thank you.
Apologize for that. Good morning, everyone, and good afternoon. I think Mike already touched on some of the issue that we see in cross-border payments. So I think there are some key things that the consumer wants to see when they send payment cross-border. And those things are speed, cost, transparency, traceability, and probably inclusion, financial inclusion too. So and in a way, we've started modernizing the system. The system started being modernized about 20 years ago when we saw the implementation of RTGS systems or ACH system in local currencies. Then we moved on towards a standardization using the IBAN, and we know if there is a standardization, there is lower cost associated to it. So I know talking about RTGS seems a bit weird as a way of modernization, but you need to remember that 20 years ago, when we were making payments, even using the SWIFT network, then the local bank would usually use a sort of compensation, manual compensation to make your payments. So that was already a sort of modernization. Now we need to go through more digitalization, I think, of the payment system in those countries. So you need to remember the most cross-border payment will use a SWIFT network to make a payment. And when you reach the local bank, that might take a few seconds. But where the problem is really in local currency is once you want to make payment to the final beneficiary, that's where usually you incur costs and speed issues, okay? Because there is a lack of infrastructure, usually a core banking system with a smaller bank. So they have more issue to read empty messages, for example. So I know it sounds very technical, but I'm sure Dennis will touch into modernization of this, which will probably come with the ISO 20022, and that will help probably the smaller bank and the bank in the region to read better those messages. I mean, the empty will disappear, obviously. So we also see there is a need of being more digital, if you want, in the sense that RTGS system. So I'm talking about cross-border payments when a corporate wants to make a payment, say in Malawi, for example, or in South Africa or in Namibia, okay, in local currency. So in a sense, RTGS system is not always the right fit for those payments, especially as we see more and more low-value payments coming on board. So we need to improve the connection with those local banks through, some systems such as API to have access to the ACH system, which really, in terms of cost, will make a massive difference. in terms of traceability, I think, and that's quite important, I think we're getting there with GPI, for example, but there's still a long way to come for local currency payments. So we need to improve this. We need to improve the traceability. The customer wants to know where the payments are at any stage of the payments process. Now, it's interesting because Mike spoke about instant payment. And we've seen, and that's quite interesting because we've seen many countries developing instant payment, and it works really well. But unfortunately, it just does not work yet for cross-border payments. Any cross-border payments today will take between 2 and 5 days to settle to the final beneficiary. So I think there is real work to be done there. I believe there is the Bank for International Settlement doing some blueprint work on this called Nexus. So that's really interesting too. So we need to go further on this. And I think regionally, there needs to be, as Mike was saying, regionally, there needs to be a better integration. And where we're going to come is that we're going to get to instant payment for cross-border payments, but also I think there'll be implementations such as confirmation of payee, for example, which is really important when you make a cross-border payment, is to know the beneficiary paying, you've got the right details. Because if you don't have the right details, that means you're increasing the cost because the payment is not getting there in the time frame that you want it to get there, okay? So there's a lot of innovation that can be put in place. You know, we've seen a lot of innovation in the mobile space in Africa. I mean, let's be honest, Africa is leading the way when we talk about mobile money. We just haven't seen this modernization yet into the cross-border payments. But I think that will come, and as Mike says, that we need to talk to regulators, we need to have a proper framework in place. You know, we need to have probably some liberalization on the FX market. And I think also what we really need is we need to involve everyone, not just the commercial banks. You know, we need to have the fintech around, we need to have the PSP around, we need to really have a consultation to get there. But I would say, and we've, you know, that was our really our core business for the past 30 years, but I will back Mike on this. What we want is cross-border payments made in local currency. We do not want cross-border payments made in euro or USD because that's not the currency those countries are using. You want to support the local currency and you need to have the right infrastructure to support this.
Sure.
So,
thank you very much. That's a great overview of some of the issues that payment providers are facing across the continent.
Yeah.
Turning to Dennis now at Swift. Obviously, Swift's both a global leader and an instrumental stakeholder in the payments system. But Beatrice there just hinted at also the roles that banks, central banks, and regulators can play. Dennis, how do you think they can all work together to decrease transaction costs, improve efficiencies, and ultimately support the final transaction beneficiaries?
Thanks. So I think a lot of the points have already been touched on. So I think the two fundamental issues that we were facing was obviously transparency and being able to trace the payment where it is. I mean, any of us that have worked in a commercial bank 10, 15 years ago, it was not unusual to hear a payment took 2 weeks to get from point A to point B. So, also touched mentioning GPI. So GPI, one of the initial building blocks, which forms part of the SWIFT strategy over the next 5 years, which includes a number of things. One is building a platform to make payments, to reduce the friction within the payment stream, as well as to introduce more data. So, I mean, obviously, the more data you have within a message, which is related to the adoption of ISO 20022, the easier for those payments not to fail. So, mentioning GPI, I mean, today, I don't think we have the challenge in terms of very close to instant payments. Over 40% of payments on the GPI using GPI settle within 5 minutes. So, and that's not settled, and that is credited to the ultimate beneficiary, which is a huge improvement, as well as providing insights into where the payment is, etc. On top of this as well, we're building things like you'll be able to query a payment, or you'll be able to change information on the payment on the fly, instead of where we are at the stage, you send a payment and something's wrong with it, it just comes back and you have to resend the payment. So linked to the API in reducing friction in the payments is obviously ISO 20022 program and the adoption of ISO 20022 standards. So SWIFT and the SWIFT community have made the decision to adopt ISO 20022, and by November 2022, all institutions will need to be able to receive ISO 20022 formatted messages. And then between November 2022 and November 2025, institutions will then they need to be able to gear up. There will be coexistence between MT and ISO 20022. And then after November 2025, it will be ISO 20022. So, your MT1 series, 2 series, and 9 series messages will be phased out after that. Now, coming back to the costs, obviously, to make a payment, there's a lot of costs associated to it. You've mentioned obviously exchange, having to buy, dollars and then the other end convert dollars back, but we can get around that. But I think some of the other costs that are associated, obviously, sanction screening, there's, in different countries, there's responsibility to report to the central bank. And this is where I see ISO 20022 messaging coming in, besides ensuring that less payments fail because of poor information, non-information, or incorrect information. I think information in these messages in exchange can also be then shared. These messages can be copied to regulators or the central banks for them to manage their exchange controls. And in terms of, sanction screening and name screening, over and above what SWIFT is doing centrally, we are then going to also build a neutralized services or institutions to be able to do their sanction screening, be able to manage the anomalies in payments. If I'm trying to make a payment to a beneficiary, I've never made a payment with the should be flagged. But by bringing this into a mutualized, centralized, we are able then to obviously put, the savings from each of these institutions going and buying their own software, etc., will be able to reduce the cost. So it's a good question. I can't answer on behalf of the central banks, the commercial banks, because they have their own hidden costs in terms of, obviously a lot of the processes are manual, and they have to do screening, and they have to provide, reporting to the central. But I think with ISO 20022 messaging, and less friction in the payment, the payment channel, these benefits can be passed on, and then ultimately to the customer at the end of the day.
Sure. Thanks, Dennis. Obviously, Dennis has just mentioned a lot about the kind of systems and regulations that are being put in place and that are improving matters. But at the heart of all this, obviously, is the technological underpinnings of the system. So, how can banks and other partners leverage the kind of new technology that's available to modernize payment systems? And what are some of the main technological trends that are shaping the current cross-border payment industry?
Sure. I think if we think back to what Mike was talking about earlier, he said payments are essentially a tool to enable trade, and the enablement of trade improves lives and improves the lives of everyday people. So it's really just a vehicle of living one's life. So it should be very easy, very frictionless, and universally available. But unfortunately, it's not. And if we look at why it's not, the matters that Beatrice and Dennis have highlighted are just a small example of how complex this topic really is. But if we kind of take a step back and look at this from a higher level, the emergence of real-time banking and payments and an increasingly open financial ecosystem requires that fundamental modernizations have to take place across the board. And this is true from financial infrastructure, from business practices and SLAs, to globally or at least regionally accepted standards and various other things. And again, zooming out a little bit further, not only do we need modernization to meet the needs of today, but I think it's even more important to think about how we can meet the needs of a more complex world tomorrow. I think sometimes we think that technology is what it is, or broadly is what it's going to remain as today, but we forget how far we've come along the technology curve. And this is true for Africa as true as it is for anywhere else in the world. But if you look at the financial services industry, we see that financial institutions and market infrastructures are sharing a very real and a very common challenge. Many operate legacy systems and use proprietary messaging formats that were developed decades ago without globalization in mind, without interoperability in mind, certainly without mobile and tablet technology in mind. But meeting the needs of fast, accurate, and secure payments and cross-border payments requires a level of, at the very least, regional, but hopefully global cooperation, infrastructure modernization, and standardization. So I, of course, believe that technology will solve many of these efficiencies, and we will just increasingly have to embrace technology more and more for this. Our friends from the FXM Bank often speak about the ABCD of technology, and this is artificial intelligence and blockchain, cloud, and big data. We're not going to get into all of those today, but I agree that each of these innovations, and several others for that matter, will not only individually but collectively change things, not just in our industry, but probably across all of global industry. But so far as specifically payment systems are concerned, we've seen really good evidence of growing, meaningful global collaboration. We've spoken about GPI, which is a great example of bringing a retail experience into the everyday business life of treasury managers. We've also seen the emergence of new instant payment systems being built all over the world in various different countries, and increasingly built on the ISO 20022 standard. And payment market infrastructures are now increasingly directing their national infrastructure towards this new open financial standard. So that's a really positive development. And I think that today there's broad agreement that instant, traceable, and cost-effective payments are what customers are really expecting. But as we know, this is somewhat tricky to deliver. And a large reason why this is difficult to deliver is because many of the players in our industry, through no fault of their own, just through the course of history, operate layers upon layers of legacy infrastructure, which in its isolated unit works perfectly, but is not interoperable with anything or anybody else. And for this reason, these legacy infrastructures can't be easily or quickly replaced. And modern services which customers want are just not incompatible with these legacy infrastructures. So, how does a bank solve for this problem? I think there are three options. Broadly speaking, I'll quickly go through them. The first is a big bang replacement of their core, and this is, avoidable. At the highest level. This is the highest risk and the highest cost option, and is only really taken up if there's a regulatory imperative or if there's critical obsolescence. The second is almost the reverse of the previous option, and it's using a completely new technology stack, kind of like a greenfield project. So think about a bank, very, very basic example, that offers a current account or a savings account, and it's built 20 odd years ago, and customers now want real-time payments and a fancy new app and all sorts of digital services. This bank would essentially create a new bank account offering on a new application with all the bells and whistles, and new customers to this service will be directed to the new application, and customers using the old one will be encouraged to move. And after a certain length of time, you'll be able to switch off the old system and retire it. Both of these two options are possible, but maybe not ideal. So the third option that we see, and is probably the most common approach, is an iterative modernization approach. And under this approach, banks can keep their existing core in place. Again, it works, and it's going to take time to think about a whole new world, but fundamentally it works, but it needs to be more interoperable. So banks keep their existing core in place, and they modernize their highest priority and most strategically important business functions onto standalone, modular, microservices-based systems. And it's very much a matter for the bank or the institution to identify what is strategically important to them, and then to modernize their infrastructure around that. But ultimately, what this allows an organization to do is to innovate from the inside out and do it piece by piece. And I mentioned this a couple of times, but interoperability is really the key here, because it's connecting the old and the new. And although the old and the new systems speak completely different languages, they do need to communicate with one another for the purposes of SDP and for data exchange purposes. Dennis mentioned capital controls with central banks, a great example. So these systems need to be able to communicate with one another and with third parties as well. And in order to support interoperability, many organizations are looking to middleware technologies. These middleware technologies help organizations bridge the old to the new without having to undergo time-consuming, often very expensive, and often very high-risk changes to their core applications. And again, the Swift Fin to ISO migration that Dennis touched upon is a really, really great example of this. Everyone is having to make this change, but it's not necessarily compatible with their existing technology stack. How do you solve for a problem like that and remain in compliance? So we very much see technology as the key enabler for banks and other financial services players to efficiently and effectively, cost-effectively access new services and deliver real-time payments with their customers' demand in a way which doesn't expose high operational risk. Finality of settlement is very important, as Mike mentioned, and we see interoperability powered by middleware technologies at the very, very heart of that.
Sure, thank you, David. As you mentioned, there's a key role in this for various technological fixes, and we've at African Bank and African Business, we've reported a lot on the exciting rise of financial technology firms in Africa, particularly startup firms. Mike, how are smaller firms disrupting the payment landscape, and what are they bringing new to the table, and what role do you see them continuing to play in some of the fixes that David has just laid out?
Okay, thanks. Small startup tech firms, are actually increasingly playing a major role in terms of transforming of how we do payments, not just on the continent, but across the globe. And it's not a bad thing. I think that, there's room for so many different types of players. We just need to make sure that they are all playing in some form of an orderly fashion, which is why for us at PAPS, we see our role as building a superhighway connecting all of the different countries and, allowing as many different cars to be able to ride on the roads that we're building. So we're going to have fast cars, we're going to have big trucks, we're going to have small, and we'll also have bicycles also riding on that rail. So to that extent, we think that the market is big, but cross-border transactions, the more we go closer to a single market Africa, the more we're able to engender. So I think, for large institutions, they will increasingly find it difficult reaching down, and to bridge those gaps, those small startup organizations are going to actually bridge those gaps. Now, what we've also done is we know that regulators have significant roles to play, and that the regulators not only define and maintain the boxes, but we know that the entrepreneur also gets rewarded for creating value. So what we've done is to put that infrastructure in place in partnership with regulators, but enabling it in such a way that even small players can get on our rails and be able to do cross-border transactions while reaching to the very lowest of our society.
Sure. Beatrice, what exciting innovations have you seen emerging from the African fintech space that can help to answer some of the problems that we've been talking about in the last 20 minutes or so? And you'll have to remove mute, unfortunately.
Sorry, I should stop being on mute. Well, I think the best innovation, we are obviously in mobile money, but I think we need to, at least the traditional financial institution, need to understand that fintech and startup are now part of the ecosystem. And what they offer, it's a better experience. It's a better use of data that they've got from their customer, where you can track behavior. So I think the larger financial institution will have to leverage those data. They will have to use them. I'm sure the fintech will at some point want to monetize this. Of course, it's going to have to be done into regulatory framework. So I think that's the main key for me. It's that does fintech, does startup have access to consumer behavior? They know what they want. They offer better experience to their users. So I think the traditional financial institution will have to use this. I don't know how they will do it. Will they partner with them? Will they launch their own hub as a fintech on the side? I would imagine, as Mike said, there is space for everyone. And at some point, you're going to have to put everyone on the same rail. So we because at the end of the day, what you want, it's a better consumer experience, right? When we talk about speed, there is a problem with not settling on time. It's a consumer who at the end of the day is penalized. When there is costs, for example, when we see in the South African region or in South Africa or Namibia, there's costs associated by balance of payment reporting. All those costs, it's a consumer who's paying for it, when we talk about cross-border. So at the end of the day, everything you do, you need to do it with the consumer in mind. And I think they really understood. I think all those fintech, that's something they really understood. So I think we really need to leverage this.
Sure.
Now, I would say one of the challenge I can see for those fintech and those new technologies, probably there might be a problem of connectivity at some stage. Let's be aware that not everyone has access yet to internet on the continent, so there may be a problem of connectivity. And of course, and I'm sure the regulators have thought about this, but there may be a problem of data sharing. Okay, so data protection for consumers. But with this in mind, I do think that that's the way we are going to go. On another end, we can see there are innovation. I mean, David spoke about several innovations for the large financial institution. But what we see more and more is that they want to partner with technology company, those institutions, because they can see there's cross-border is, the amount of cross-border payments is just, skyrocketing every year. And so they want to find solutions. So we're not, in a sense, not asking them to improve. They're coming to us what they can do to improve, to not be excluded from this market. And I think that's a change, and that's really important. So we're going to see more and more use of technology services from those banks, even a smaller player, to be able to take part into this cross-border changes, I think.
Sure. Dennis, as a representative of Swift, which is obviously one of the most established companies in the market, how do you think that Swift and the other larger players can work with some of these upstarts to improve technology and to improve the overall payments experience?
Well, as you know, Swift is a cooperative, so set up by, let's say, the more larger commercial banks as we know them. If we go back in years, or it would be a discussion of looking at new entrants and how they can become part of the larger payment market. But I can see the appetite. Obviously, a couple of years back, Swift did allow corporates to join, under certain conditions. But no, I think there's two things you need to look at here. A lot of who can take part in the payments system or not is regulated. So the regulation needs to change. And an example is, for instance, I can give South Africa. They are rewriting the National Payment Act so that the traditionally so-called non-banks can also enter into the payment system without going through a sponsoring bank. And this is just a snapshot of what is faced in many of these countries. What I can say is a lot of initiatives, especially around the mobile payment operators and small institutions or smaller so-called banks, they're not much of a digital bank. They are coming into the discussions on how they can enter the payment system. But in a lot of the cases, as I say, the regulation changed to allow them to become direct participants. Currently, a lot of them have to be sponsored through traditionally larger banks in the region. So
Sure.
I think the technology is there. I think what needs to change is obviously the regulators, and then then it gets a little bit more complicated outside of domestic. If you look at regional initiatives at the moment, my experience, with like the likes of the SADC and payment system, the Iterative payment system, it is still very grounded in the traditional banks. So how do we get the non-traditional, the non-banks into this payment system, and that's the question. And maybe on top of that, there's still this silo. I mean, obviously we have payment systems, then we had mobile operators with their own silos. So how do we get from all these different payment systems to one payment systems, which obviously is the benefit of the consumer?
Sure. David, that obviously calls for more kind of nimble regulation. Do you see any appetite among regulators to truly liberalize the market and make it a more welcoming place for new technologies and new players?
I do think that the regulators, the local regulators, have seen the potential of fintech bringing and driving financial inclusion, promoting financial education, and essentially providing just a better customer experience. So from a regulatory perspective, as a technologist, let's say in the room, I would only say that from a technology standpoint, innovation is demonstrably an enabler, and regulation and policy should be very careful not to stifle this or to act in a way where you discovered unintended consequences, which is obviously very hard, but needs to be thought through very carefully. And I also think that community consultation is really important. We're not talking about a few established players in the market deciding policy. It really needs to be inclusive across all participants and constituents across the board, with prudential security and consumer protection in mind. And I think if we can see more transnational cooperation on this, certainly ideally global cooperation, that would be really something that would better the broader industry.
Sure. Mike, this kind of trans-border cooperation that David's talking about, do you think that's been further enabled by the African continental free trade area? Do you think there's more of an understanding among policymakers that there needs to be technical improvements under the kind of big picture trade improvements in order to truly bring about a more integrated African continent?
Yes, I think that that awareness is very strong. We have been working very closely with the Africa Continental Free Trade Agreement Secretariat, and we've enjoyed significant cooperation. There's the realization that without a solid payment infrastructure, then it will be difficult for the AfTA to be able to achieve the goals that it has set out. So now what is happening is they have played a good role in terms of convening the different stakeholders. And for the first time, countries, central banks are coming together and coalescing around a single idea that we can actually create an infrastructure for the continent. And I think David was very spot on. There's always the balance between innovation and regulation. So what the AfTA has done, also working with Afrexim, is being able to bring together all these central banks and all the different stakeholders to actually agree a way forward that will be able to maintain the minimum expectations from a regulatory compliance point of view, but then create a framework for getting the entire continent moving. So there's some work currently ongoing, and it's being spearheaded by the AfTA Secretariat, focusing on actually creating that continent-wide cross-border payments framework. So yes, the AfTA has played a pivotal role, and they are really using their convening powers to bring people together around the idea for an efficient cross-border payment system.
So Beatrice, if a lot of these improvements end up taking place, and what policymakers have suggested ends up being implemented, what do you think transaction banking in Africa will look like in the future? Do you think that Africa's model will be as mature as some of the developed world markets in a fairly short order, or do you think we're talking about a kind of medium to long view of a kind of seamless payment system?
Well, maybe not in a short term, but I would think in a medium term. But I think what it will look like, and I think that will be thanks to the many fintech in Africa, is that those fintech are going to bring financial inclusion. And when I say financial inclusion, I mean there's a lot of people in Africa which are still unbanked. And yet, if you think about it, take the example, making this out, but take the example of a Canadian mining company, for example, paying their workers in cash, okay? Well, all those workers have mobile phone. At some point, they will want to be paid through their mobile phone. And you need to think about this as a cross-border payment, because this HQ will make a payment for salaries from Canada within, say, the XOF region. So what is going to be achievable, I think, in the future is that banks are going to work with all those fintechs to bring this to the table. So in the future, when you make new salary payments, you will reach all those people. And I mean financial inclusion for all those people, because once you've reached people, once you get out of this cash economy in a way, then you bring, those people will want health product. They will, again, you can have data on them so you can track their behavior. They'll be able to save. You'll be able to offer new products to them. They'll be consuming in a different way, and that's so because often when we talk about cross-border payments, we usually talk about goods and services, but we need to go further than that. We really need to leverage, those fintech, the startup, mobile money aggregator in the way that we're reaching more people without the need maybe for them to actually go to a bank, to a physical bank, or having a bank account, or maybe it could be linked to financial institution there. But I think for me, that's the next step, because there's still too many people in Africa which rely on a cash economy, and we need to move from this cash economy. I think that will be done. I think within 10 years, hopefully we will be done with it. There's some great initiative being done. Mike, I'm sure you're aware of it, but there are some great initiatives being done in Senegal at the moment. And I think generally, workers do want to get out of this cash economy and be able, to access product that at the moment are really accessible to a sort of middle class consumers. So that's what I think it will look like in the next 5 to 10 years, in my view.
Sure, yeah. The priority being expand and get away from, as Peter says, middle class, and the middle class and fairly traditional forms of, capital movement. How do you really broaden that out to include the majority of the African population, especially people at the moment who are unbanked and don't have access to traditional banking services?
David, was this question for me?
Oh, sorry, that was for Dennis. Sorry.
Sorry, initially there was a bit of background noise there. So
yeah, sorry. So how do you, just moving on from what Beatrice said, how do you expand that pool so that the people who are typically unbanked in Africa, which of course is millions of people, can be brought into the formal payment system?
Well, I think the technology exists. Once again, we get back to costs related around it. So, so we at this stage we have this conversation in a number of countries. We have traditional banks and obviously introduction of the non-traditional banks, which can provide financing and banking services to the population at a much cheaper. So obviously there's this, so now the regulation, how do you regulate both of them? So obviously you have large institutions that come in effort to get, serve the population, and now we have these other guys coming in that they say they're under-regulated. So how do we get them on the same path? But once we pass that, we still need to get back to the fundamentals. And if somebody wants to make payment at this age, it is just too expensive. So how do you manage? How do you set up a scheme so you can have a cross-border payment setup? But what the different institutions or the different payment operators that are using it have their own list of what are the pricing. So how do you set a price which is priced right for the input for the end consumer? I mean, it's a difficult question, but I mean, if we want to get to the point where payments between different countries is cost effective and easy, and the easy to do is probably the easiest part, but how do you price it and how do you get everybody around the table to buy into that? So it's my this is why we have these silos where you have the likes of the mobile operators making it because it works, but only within a certain geographical area. How do you get that model to work across Africa?
Sure. I guess that, David, that's going to be a key issue going forward. The issue of pricing. How do we ensure that kind of equity across regions and across countries to ensure that there's a truly kind of uniform system across Africa rather than disparate payment systems that don't really relate particularly well to each other?
That is a very hard question, but I think that if you look specifically in Africa, M-Pesa is a great example of finding new ways to solve old problems. M-Pesa is fantastic in terms of what it's been able to deliver and the impact it's had on people across the continent. I want to be a little bit crazy here and say, technology is only going to get more frighteningly incredible, in my view anyway. We got Elon Musk trying to launch Starlink. Let's just imagine for a second that in a decade or two, we have, reliable internet across the continent, which is freely available for use by anybody. That will generate new business models, it will generate trade, it will bring lots of people into the fold. And I think ultimately it kind of follows a network effect. So in an age where a tablet device or a mobile device gives you access to the internet, and the internet is your another superhighway, shall we say, Mike, for people to innovate on and live their lives on. Many different things can come out of that. I think it's important to make sure that I think if you look at it from today's point of view, how do we make sure everybody is involved? It really does seem like a mobile or a tablet device is important. I think that we see the trend going in the right direction. There'll be many more connected devices in the next 10, 20 years than there are today. And it's important that, people are aware of what these are, and, people can also use them and access various financial services, not necessarily from a traditional financial institution, but from fintechs. Again, these fintechs are providing great ways for the unbanked population to access financial services in a way which doesn't, fly over their heads or cause all sorts of problems, and in a way which improves their lives.
Sure. I guess a crucial question is really when we're talking about such, topics which can often be quite technical, how do you communicate the importance of that to policymakers? Beatrice, do you have any view on that, and how you basically properly inform African governments about the importance of technical infrastructure and technical regulations? Is that a difficult conversation to have?
I don't think so. I think they're well aware they need to have a technical infrastructure and to have better infrastructure, and not just technical infrastructure, and infrastructure for trade, infrastructure in terms of foreign exchange. I think they're aware of it. It's just the pace at which it's being done. But I think it'd be wrong to say they're not aware that needs to be done, implemented. It's just it's you need to think as when you're a regulator, you cannot take a very quick decision. You need to look at the ecosystem as a whole. So it always takes a bit of time. And unfortunately, we're in a world where, technology improvement, which means that we don't really want to take this time any longer. So everything is moving so fast that, it's not a criticism. They can't move as fast as innovation. I think, you're always on the back foot generally when it comes to any innovation when you're a regulator. And that's not just in Africa. It's everywhere in the world. Every central bank has this issue. Like, how do you react to the innovation coming in? Whether, that's not just a problem in the continent, in my view.
Sure. I guess that's quite important to have the pace of technological change outstripping the potential of policymakers to keep up with it. That's a kind of luxury in a way that we've got that problem.
Yeah.
We've got an audience question here for Mike. Mike, what do you see as more important for the Pan-African payment system, settlement system to provide? Instant payment or multi-currency settlement?
Okay, I think today this question is more of between what you know as your problem today and what you don't know is a big problem. Sometimes people are comfortable with doing regular payments as long as it takes until they discover that there's something as good as instant payment. I used to think I had good eyesight until I went to a doctor and he showed me how good my eyesight can be with a pair of glasses. So I think that there has to be a balance between achieving instant, and the big problem that they have today is dealing with foreign currency. I think that if we are able to deliver this service done in local currencies, it will be a very significant boost to African trade. Now, if we're able to go a step further and make them instant, I think that would have been able to solve significantly the challenge of cross-border payments on the continent.
And what more work needs to be done on multi-currency settlement? Obviously, it's at the instant it's important to do instant, but with the currency fundamentally is one of the problems here. So, what more progress do you need to see? Are those debates taking place right now?
Yes, there are debates taking place. Again, when you have to settle cross-border transactions in a third international currency, what happens is the African countries do so at the expense of their own individual currencies. So the more they are able to rely on their own currencies to do transactions, the more they are able to more or less strengthen the local currencies. So I think that there are conversations, there are a number of different routes. There's the conversation around having some form of a unit of exchange among the local African countries. There's also a conversation around some form of an African currency. I think that they are all good conversations, but perhaps is actually a next step before we get to those other conversations around having a single currency. And I'm not even sure that is necessary at this time. We need to be able to facilitate trade seamlessly across the continent.
David, do you see any potential for that going forward for currency integration? Do you think that would be useful to facilitate easier payments, or do you think that it will be more necessary actually just to focus on the practical implementation of a lot of things we've talked about?
Most certainly the latter, and I come back to a point that Beatrice mentioned earlier. We think that it's really important for payments to be in local currency so far as possible. This obviously isn't the way that global trade has happened to date, but I think that the benefits of switching to increased local currency payments payouts is largely logical and self-evident. So the more we can work towards that, I think the better outcomes we will see within those countries and regions.
Sure. And is this typically more of a problem in Africa just because of the sheer number of various currencies, the sheer number of different systems compared to other regions, other continents?
It's kind of hard to say, because it wasn't too long ago that we had all sorts of different currencies across Europe. That's not to say that I'm suggesting one for Africa, but there are ways around this problem. Technology is definitely a way of helping solve this problem. Politics certainly intervenes to a certain extent, but if we can find frictionless trade possibilities using technology in a way that doesn't disrupt, the way sovereign states operate their business, then again, that's only a good thing. It's very hard to get, many different people singing from the very, very same hymn sheet, particularly across political borders. If that's something possible, it's worth looking into. But if it's not, I think there may be other solutions available too.
Sure. Beatrice, do you think those are interesting conversations around, currency integration happening at a regional level? And do you think that's something that, that will increasingly come into the conversation over the next few years?
I mean, they've already happened in some. We've seen already some integration happening in region, if you want. So you've got the CFA, which is, you've got the XOF region and the XAF, the BCAO and the BEAC. So that, I think that really helped already for cross-border payments. among those different countries. But we've seen also how difficult it is because you have different economy, and we can come back to the Eurozone. You know, it's been a challenge even here to put a single currency in place because you have different economy, you have different legal framework and all these kind of things. So there has been talk, you know, about the East African currency too. I mean, it's sort of in place, but you know, I think it generally it's across the continent. You need to think you've got 54 countries. It's going to be difficult to have a single currency. So I think the way forward is find a way to facilitate cross-border payments in local currency, and maybe not get stuck on the idea of having a single currency where you have such disparity within the continent. But I think on the regional basis, that may happen with similar economies. But a single currency for the continent, I think there's no, in my view, there's not even need to think about it because that's not going to happen. It's going to be way too complicated.
But I guess to conclude, Mike, that the direction of travel is particularly encouraging at the moment with, you know, the framework of the AFCFTA and, you know, policymakers really talking about the need to increase cross-border trade, and all those conversations are really helping to move the dial on payments infrastructure as well.
Yeah, absolutely. It's certainly helping. I think it's fantastic that we're able to talk. And I think one of the biggest plans from an AFCFTA point of view is actually achieving interoperability. A lot of good work has been done in the East African space. Beatrice talked about the BCL and a few of the other regions where some implementation had been done. But how do we bring all these implementations together? And, you know, that's sort of the kind of place where perhaps things that we can actually bring value to the continent. And the AFTA is helping to facilitate those conversations.
Sure. Well, there's clearly plenty of scope for future discussions around a lot of the issues we've talked about today. But I'd like to thank all of our panelists for being with us. That was really comprehensive and interesting overview of the payment system and where things are at the moment. So thank you all panelists for joining us, and thank you to the audience for tuning in today.
Thank you very much.
Thank you.
Goodbye.
You're on.